Yes, welcome back everyone. My name is Pratesh here with Kaizen Crypto, bringing you guys another video here today. We're talking about some recent news. I've got an article pulled up for you guys talking about the IRS and them sending 10,000 letters to crypto investors, as well as we're going to be taking a look at some price analysis, taking a look at some charts here, and giving you guys my thoughts on where we are with the overall market and what we can expect with the price, as well as an interesting piece of content here I've got pulled up. So this is actually a graphic showing the prices of the top 20 cryptocurrencies and how far we are from the previous all-time high. So if you guys are interested in that type of content, please be sure to smash that like button. Let me know that you found some value in this video. Also, if you guys are new to the channel and if you like this type of content, be sure to stick around. Hit that subscribe button. I post videos almost every day talking about cryptocurrency news and investing strategies. So if you guys would like to join the community, you're more than welcome to hit that subscribe button, click that notification bell so you know when I do post a new video, and leave a comment. Let me know your thoughts. Alright guys, so let's get into it. We'll start here by taking a look at this article that I found. This is on Cointelegraph. So the IRS is sending 10,000 tax compliance letters to crypto investors. So I've just got the article pulled up for you guys here. I know that I watched the video from Altcoin Daily and he did a good job of explaining this as well, but essentially the IRS is going after people who they know supposedly own cryptocurrency who did not necessarily report that on the previous year's tax return. So let's go ahead and take a look at the article here. It's saying the United States IRS is sending letters to crypto investors to clarify crypto tax filing requirements and in certain cases compel them to pay back taxes. The IRS announced its letter campaign in a press release on July 26. The IRS states that it has sent letters to 10,000 crypto investors, asking some to amend their tax filings while compelling others to pay back taxes and/or interest and penalties. The Revenue Service states that the letters should be delivered by the end of August. Per today's announcement, there are three different letters: Letter 6173, 6174, or Letter 6174A, which strive to help taxpayers understand their tax and filing obligations and how to correct past errors. The IRS Commissioner Chuck Redding said, "The IRS is expanding our efforts involving virtual currency, including increased use of data analytics. We are focused on enforcing the law and helping taxpayers fully understand and meet their obligations." Skepticism towards the IRS. Some are more skeptical about the IRS's intentions. According to a July 26 Forbes report by crypto tax attorney Tyson Cross, the tax authority could be using a list of taxpayers identified by CoinBase in 2017 to conduct a blanket campaign, saying, "This would seem to indicate the IRS is sending these letters to taxpayers as a phishing attempt without any real belief that each recipient has underreported." Cross says that several of his clients who accurately reported have received letters and writes that several other tax professionals have revealed that their own clients, despite accurate reporting, have also received letter 6174A. Letter campaign follows low filing rate for crypto taxes. Cross advised investors not to panic should they receive the letter, but to thoroughly ensure the accuracy of their tax returns, given that at the very least it means they are on the agency's radar. As previously reported, data released ahead of the close of the preceding tax year indicated that just 0.04% of tax filers were reporting capital gains from crypto investments to the IRS. Back in July 2017, the IRS had required that major U.S. crypto exchange CoinBase hand over detailed information on every one of its 500,000 plus users in an attempt to prevent tax evasion. However, a court order in November 2017 reduced this number to around 14,000 high transacting users, which the platform later reported as 13,000. An alleged presentation by the agency earlier this month revealed that the IRS hopes to use grand jury subpoenas on firms such as Apple, Google, and Microsoft to check taxpayers' download history for crypto-related applications. Alright, so this is interesting to see. The IRS is going after people who hold cryptocurrencies. what this is telling me as an investor is that these governments, these central banks, are scared. They are absolutely terrified of what is going to be coming. This cryptocurrency revolution is taking on this legacy system head on, and it shows. The IRS is no joke. I mean, they will get their money. There's no doubt about it. But to think that they are actually going after people like this, it can be a little bit frightening, absolutely, especially if you're somebody who has to deal with this by receiving one of those letters. But I think in the grand scheme of things, this just shows the legitimacy of where we are heading as an industry. So very interesting to see that. The IRS, of course, it's nobody's favorite institution, but it is what it is. All right, so moving on here, I've got an article pulled up for the price analysis of where we are currently. So I'm just going to read aloud here. We're going to be looking at a few of the major altcoin players, but let's get started. So it's saying a new study by digital asset management fund Grayscale Investments shows that 83% of American investors are likely to invest in Bitcoin. Another interesting finding was that the average age of Bitcoin investors was 42. This means that even traditional investors are allocating some portion of their portfolio to cryptocurrencies. As the markets mature, we expect cryptocurrencies to occupy a larger portion of portfolios. Okay, and then this talks about a price prediction from some guy. So let's take a look at the charts here. So it's saying buying in a downtrend or during uncertainty can result in huge losses. Therefore, patience is key for traders who want to be in the game for the long term and be profitable. Bitcoin is currently hovering above the important support zone of 9727 to 9080. It is very difficult to predict whether the price will bounce from here or correct. The 20-day moving average, which shows the short-term trend, has started to turn down, and the RSI has been trading below 50 for the past few days. The moving averages are on the verge of a bearish crossover. These indications suggest that bears have the upper hand in the short term. Nevertheless, the 50-day simple moving average is still sloping up, which shows that the medium-term trend is up. When the long and medium-term trend is up, dips should be used as a buying opportunity. Therefore, we are waiting for a bottom to be formed before recommending a long position. The next few days will confirm whether the BTC-USD pair bottoms out at the current levels or at the next support zone of 74.51 through 69.33. On the upside, we anticipate the pair to pick up momentum after it breaks out of the downtrend line of the descending triangle. Okay, let's take a look at Ethereum. So the bulls have managed to keep Ether above the uptrend line, but are unable to carry it above the 20-day exponential moving average. This shows hesitation among buyers at higher levels. If the price does not bounce sharply within the next few days, the uptrend line might break. Okay, now with these trend line guys, this trend line, it started from February, and here we are in August, and this trend line is still significant here today. It's almost like a brick wall at this point. With trend lines, essentially, the longer the period of time that the trend line has been respected, the more validity that it should receive. So in this case, we have a touch here mid-February, which is where this price has respected the trend line since. And we came back here to test it, and we bounced off of it, and we're holding above it now. So this trend line should act as somewhat of a brick wall. Now, in the case that we are to break down below this trend line, let's continue to read here to look at these price expectations. So if the Ethereum USD pair slides below the uptrend line and the recent low of 192.95, it can quickly drop to $150. The 20-day exponential moving average is sloping down, and the RSI is in the negative zone, which suggests that the bears have the upper hand. But if the pair bounces off the current levels and rises above the 20-day exponential moving average, it can move up to $320. It will face resistance at the 50-day simple moving average, but we expect it to be crossed. We will wait for the price to sustain above the 20-day EMA before recommending a trade in it. Okay, so guys, it's just a matter of practicing proper risk-reward management. You want to wait for confirmation if you are trying to trade this market. Me personally, I'm an investor, so I'm looking at this from a long-term perspective. I use these types of situations where the price dips down in an uptrend as a buying opportunity. Not financial advice, guys. This is just me reading aloud an article to you. So please do your own research, make your own informed decisions. But continuing on through the article here, we're going to be looking at XRP and Litecoin, and that's pretty much it for this segment. So XRP is not generating any interest from buyers. The sellers are also not attempting to break down of the critical support at 0.27. This might result in a consolidation around the current levels for a few days. If the price remains below the 20-day EMA, bears are likely to attempt to break down of the 0.27 again. If this critical support breaks down, the XRP USD pair can enter a downtrend, which will be a huge negative. However, if the price breaks out of the 20-day exponential moving average, it can move up to the 50-day simple moving average. Above the 50-day, a rally to 45 cents is possible. Long-term investors can buy at the current levels and keep a stop loss below 27 cents. This gives them an attractive risk to reward ratio. Nevertheless, swing traders should wait and buy only when the price starts to move up. All right, and finally, Litecoin. Volatility in Litecoin has shrunk. This suggests a balance between buyers and sellers. Both parties are playing it safe and are not trying to assert their supremacy. We find that the digital currency regularly enters such periods of low volatility, marked as ellipses on the chart, which ends with a decisive move. If the price enters a tight range, traders should wait until BTC USD pair makes a strong directional move. If volatility expands to the downside, the pair will resume the downtrend and can plummet to $58. Nevertheless, if the breakout happens to the upside and the price scales above the 20-day exponential moving average, a relief rally to the 50-day is likely. We are currently neutral on the cryptocurrency. All right, very cool. So interesting to see these thoughts and opinions from Cointelegraph. These are just some of the charts that we're looking at here. Guys, if you're just tuning in, be sure to smash that like button. Hopefully you found some value from this video so far. And finally, to kick things off, this is the last piece of the video that I have for you here. This is a little piece of content that I found on Twitter talking about how far the top 20 coins are from their previous all-time high. So let's take a look. Of course, we can see Bitcoin. You know, the current price, I guess so, the current price is kind of in the middle. So it's an 81% correction from its all-time high. Its current price is you know, it's in the middle from where we're looking at all-time low to all-time high. Ethereum closer towards its all-time low. Okay, so guys, what I'm gathering here from this chart, you know, I'm just trying to piece it together here. If you guys are able to gain some insight and maybe kind of give me your thoughts on it, that would be really awesome. But what I'm looking at here is just seeing where the price is currently. I mean, the current price is represented by this dot right here. You've got the all-time low, which is on the left, and the all-time high, which is on the right. And this is just showing you, so if we look here like NEM, let's take a look at NEM. NEM is down almost pretty much at its all-time lows. You know, NEM is a project that I think is pretty much at a point where, you know, they had that incident with the exchange and that big fiasco. This cryptocurrency is hardly being talked about anymore. I mean, that's just from what I've seen on crypto Twitter and YouTube. And then let's take a look here. Chainlink is significantly up from its all-time low. It is down from its all-time high, but still, I mean, significant gains. Bitcoin SV, interesting to see that. Binance Coin, of course, we know about Binance Coin, probably the best performer on here, honestly. And yeah, I mean, there are really some good projects here that are really, really cheap. Well, this is what I'm looking at right here. You guys already know. Smash that like button. Here you go, ADA fans. This is for all the Cardano lovers out there. Cardano is super cheap right now. Like crazy cheap. Let's take a look. Neo, also very suppressed. So if there are any projects that you guys are looking at, let me know. What are your thoughts on some of these prices here for some of these cryptocurrencies? I think that in the grand scheme of things, we have just exited the bear market. You know, right now seems to be the accumulation phase for a lot of these cryptocurrencies. So, are you guys packing your bags? What are you looking at? What types of projects are you interested in? Let me know down in the comment section below. All right, you guys. Well, I appreciate you tuning into this video here. Again, this is Pritesh. Please be sure to stick around. Hit that subscribe button for me. I'm going to be posting a video for you guys pretty frequently. So if you did find any value, let me know in the comment section. Drop a like for me, and I will catch you guys in the next one. Cheers.